What the hell is he doing with MCAs? I don't want to get you shitty funds. I'd hate to waste time, so I'm trying to get rid of these MCAs.
Okay, is that one that you're calling about?
I'm calling about all of them. It pisses me off as a loan broker. But now you see how they even make you look bad in front of the lender.
I think I know what happened.
Okay, so we have one that's called.
Okay.
Okay, is that one that you're calling about?
I'm calling about all of them, but we can talk about which, one at a time, of course.
Okay. Well, I mean, because they're all different, right? They
Correct.
run all through the same borrower.
Same
all
owner.
The same borrower. Okay.
That's correct.
Okay, so we are going to start with. I'm going to start with. The first thing is that they have a Can Capital loan. Do you have the balance on the Can Capital loan?
I think we're at what do you call it? About 7. I gotta get a recent payoff, but I want to say 65, maybe low 60s. But I gotta get a recent payoff.
Okay, so on Can Capital, we see 7. So my notes here say 70K April 18th. So I don't know really. But on this one, we're anticipating, based on what that Can Capital balance is, I have to be able to look at what the Can Capital balances are for each.
Do you want me to try to see? I'd hate to waste time. I can actually try to see if I can get him on the phone right now, so we can kind of hash this out right now. Do you mind?
And when you say get him on the phone, are you talking about the guarantor?
That's correct, the client.
Okay. So, one moment, let me pull up the notes on the guarantee. Correct? Okay. Yep, you can go ahead and pull him on the phone.
Thank you so much. Listen, I want you to pick up on everything. The demeanor, the talking, all of this, the joking.
Yes, hello.
What's up? How you doing?
Hey, good and you, sir.
I got good news and I got good news.
Awesome.
So I think I lost her. Let me see if I can get her back on the line. I got a lender that I'm about to put you on the phone with. I believe, real quick question before I put him in, $250 we need to pay off. Is this Can Capital, Global Merchant, Blue Vine, and backed all together? Is this all that equals up to that $250, right?
Maybe a little bit more than that if you include all of them.
Okay, because all of these are the MCAs that you wanted to get away from, correct? Yeah, Headway I know is MCA. Okay.
Yeah, I want to get rid away from Headway. So, what's the company called? What's the one that Wall Funding? Is roughly about 240.
Wall Funding. I don't see Wall Funding on here. Don't bring that shit up. Don't bring up Wall Funding when we get on the phone with the lender, okay? Okay. All right. She's calling me back right now. Don't bring up anything that I don't bring up, okay?
Okay.
Hey, I don't know what happened there. You still there?
Yeah, I lost you. Yep.
Okay. I have the client on the line. Are we there? Hello?
Yes, I'm here.
Oh, we got a little weird noise. Is that you?
No, that's not me.
Oh, okay.
Can you hear me? That might be me typing in the background. Hi.
That was you typing in the background. I was like, what is that strange noise? That's ridiculous.
No, that's me. I'm typing. I'm multitasking. I got, So, how's everybody doing? Do you want to, is this two?
This, yes.
Okay. Hi, Celestial. I'm with a company called ARF Financial. And we're a lender that provides revolving lines of credit to small business owners.
Yes.
So, perfect. Well, Brian had sent you over to us, and we were reviewing, but I think just, if you don't mind, let's kind of just have a high-level conversation and tell me a little bit about what's going on, what you're looking for, what you're
I want you to notice everything that's going on here. The conversation is not rushed. We've got to break the ice. We're still human. You see, I want you to notice all of this stuff. All of this matters.
And what you're needing the capital for.
I'm taking the capital to pay off a couple things to increase cash flow.
Okay. And what are you paying off to increase cash flow?
I have a couple loans that are, I guess, high interest.
He got sold on some MCAs, Miss Celeste. As you can see, the borrower, he makes really good money, and he pisses me off as a loan broker. Really good money, has excellent credit, and was just in a bad situation. But he got sold into this MCAs. He didn't have you by his side to help him out. So I'm trying to get rid of these MCAs that are drowning him with the weekly. I think they got daily or weekly payback. So that's our first objective, is to get rid of these MCAs.
Okay. And the MCA will, so like, for example, we were reviewing for, and it looks like, so there's a note in here that there's a Can Capital 70K on April 18th. Was that the amount in which you took out, was 70,000?
I believe it is, and I think the remaining balance right now, I think we owe probably about 55.
Okay. With Can. And have you taken out any other loans through this entity, through the... Are there any other loans outside of Can Capital?
No.
Okay, so just the one. And then on the... There's a note in here that you have backed for $62,900 on April 19th. What's the balance on that one?
On Backed, I need to look at that. I believe Backed is probably in the 40s.
Okay.
That's also an MCA, right?
And then, yes.
Yeah.
And what about, did you take out any loans through?
We have a little one, maybe like 30,000, 40,000.
Okay, and that's what the balance is. When did you take that one out?
That one was taken out. That was taken out recently, actually. Probably about, I would say, 2 weeks ago.
Okay, got it. Okay, and so and all of these are car washes?
No, 2 of them are car washes. All the other ones are restaurants, and all the other ones that are restaurants are actually have been around, except for, and also they have been around for almost 30 years.
And you've owned them and operated them for 30 years, or when did you take them over?
I took over probably each location anywhere from going, I would say, 2.5 to probably almost 4 years.
Okay. Okay. On the, when did you take over that entity?
I took that one over, and also at the same time, we purchased it from the same owner. So I'm going to say about 2.5 years ago.
Okay. And do you have any cash advances on that location?
No.
Okay. Okay, so, and I'll run some numbers on that one. We're still going through the bank statements on the file because we received it this morning. With the balance, if it's, and I think you had mentioned it's somewhere around 50,000.
Yeah.
Let me go and pull really quick. Let me pull our notes because I had all these. We had specific notes, and I didn't ask about, but it looks like that one had Global Merchant Cash as well as Headway.
Yes, that's correct.
Okay. And has was Blue Vine and Global Merchant Cash.
Yes, that's correct.
Okay.
If you can help to pay those off as well, I think we'll be willing to trade the line of credit for those MCAs.
Yeah, because overall, globally, we're probably bringing in about 500, 600,000 a month in revenues. Just it was a bad spot at the time. Not bad, but we didn't know what to do.
Yeah. What is the address for? Like, what are the physical addresses for these restaurants? Because we didn't have that in our notes.
Okay, I can pull that up right now. It's 30.
Okay.
And you're probably gonna recognize a pattern with the names of the companies, and the J stands for because it's a family-owned business with me and my wife and my kids.
Oh, okay. Gotcha. Okay. So I'm gonna kind of give you, we're gonna talk a little bit high level and then I can dig into the numbers. So we're not a very short-term lender. So we typically and the NCA, even though some of these you might have out, and I haven't seen the contracts on these, but they can range, typically 1 year to 15 months at the longest point. We average out around 18 months to 2 years, but we do have some fences with the banks when there's multiple cash advances. So I want to talk a little bit about that, and then talk a little on the consolidation. So thankfully, there's not more than one. Now it has more than one, and has more than one, right, on
Correct.
the balances. So those will be very difficult to get through. But the ones that have one within a 6-month history that they're looking at, we can look at what consolidating those. But there are some rules. So based on the amount that the business qualifies for, the balances have to be 50% or less, which means the client has to net 50% rule. Brian's probably pretty familiar with that rule because it's kind of an industry rule. So it's 50% or less, the balances have to be in order to qualify. So some of these, when we look at it, is easy because there is no balance. So I'm not having to pay off a debt consolidation. So that one, we can proceed. Okay? Because that one doesn't have a balance. The other ones that you're trying to get out of because of the cash flow, as I'm assuming, is the things we would want to look at is we want to go through, we want to look at what the balance is, what the payments are, how we can improve the cash flow, and what kind of terms can we provide to help on a cash flow basis. So I'm assuming, based on your consolidation, and given you've taken over some of these businesses, you feel like the cash flow, it's crunching your cash flow. So I've been financing restaurants for 23 years. So I know the margins in the restaurant business are thin. So I know it's probably feeling a little bit of a stretch on some of these. But we can do our best, and maybe if it's not now, we can grow into, because our revolving lines of credit will give you a lot more flexibility and control to be able to draw funds when you need it, not paying interest on money you're not using, at the same time giving you kind of that flexibility of the capital when you're having that off month. Because right now in the restaurant business, you're going in high season, right, for most in the holidays. And then January kind of dips down when somebody says, oh, I need to pull out capital, right? Because I'm not having that influx. So there's some benefits to having a true revolver versus an advance.
Hey, Miss Lynn, I want you to call Joel through Ring Central and tell him we're stuck on the Zoom, but we're wrapping it up with another lender, and then we're going to call him right back here at 1 o'clock. Okay?
It's better. From that that being said, though, I have bank
Miss Lynn, you
policies
there?
I have to follow by. So there's some things we're going to have to look at.
Yeah, call Joe, 'cause we're running late. We gotta wrap this up. Tell him we need about 10, 15 minutes, and then we're gonna call him.
Is it averaging around 400,000 a year?
That's actually him calling in right now.
Check that. And it's about somewhere around there.
Okay. So we'll finish going through our review on our end, because what we're gonna do is we'll take the revenue with the credit, the time in business, the credit factors, and that will give us like a percentage of annual sales, which typically will fall because of the time in business being around 2.5 or 4 years. We're gonna validate when you took over operation. There's a big difference between 2 years, 3 years, and even 4 years. So do you know exactly when was taken over? Because it'll help me a little bit.
Let me look at the EIN when that was processed. Because I know that was processed probably about a month before closing.
Before the purchase of taking over from the previous family. Okay, gotcha.
Yeah. Or, I normally do it right around the time right before closing. Correct.
LLC.
Hey, did you speak with Joe? Miss Lynn. Miss Lynn.
It looks like it was May
Hello.
2021.
Okay, so we're right at 2.5.
He called twice on Ring Central.
Mm-hmm. And that is the same for as well.
Okay, but just took that advance in the last 30 days, so 2 weeks. So I wouldn't be able to do anything with because one of the policies with us is that if there's an advance that funds within the last 30 days, we can't review it till after 30 days. So since it was 2 weeks, we would be able to look at that in mid-November.
Okay, let me ask you a question.
Jay Bush, and see where the balances are, assuming the balances are at that 50%.
Quick question. Mm-hmm. I believe you mentioned looks good because it's free and clear of any MCA. Mm-hmm. Can you use those funds to pay down so we can go ahead and then fund once we reach that threshold, that 50% threshold?
He can, and we can look at, so let me run.
And to be honest with you, that's exactly what I'm going to be doing.
You can use it for business purposes, so let me just kind of run. I'm just going to run myself just a quick.
Because I'm not sure if you got the numbers that Steve sent earlier. Because I think Steve he had said that there was a 12 months and an 18-month offer on.
Oh, he created. Okay, Steven created. So let's go to.
I think you had a 12-month.
He ran you like 30 to 44,000 based
Correct.
on the revenue with the credit. So. I mean, that one is qualifying. It just doesn't qualify for that much. He had the sales revenue averaging around $32,646 a month because he was, and remember, we will go through and finalize it, but he has to net out all of the sales. So he's running a net based on what's being deposited. Mm-hmm. So any transfers going in all have to be removed. So based on his analysis.
So there is something here that might be missing. And Brian, that might be my fault. Okay. Each business actually has 2 different accounts. So there's another account that each business has that the employees make the cash deposits, and we actually transfer the money into the account. So that might be the reason why you're missing the cash portion.
Okay.
Yeah, we didn't receive, I don't know if we received the bank statements for that, so my assistant and Steven were going through everything. I'm using the numbers that show sales revenue. So anything that's sales revenue coming in, that's for. So if there is more cash, we can obviously add it to the sales and see what that comes down to, but that, and then looking at it from the revolving line, the other entities, like on those two, if you have cash accounts that you didn't send to us, we can look at them because we're not an MCA. We look at all sales as long as consistency of sales deposits going in, meaning that the cash is getting deposited on a regular basis. And we can review that. So in general, that's kind of why, so when we look at it, the percentage to revenue is going to be somewhere, when we run just ratios, that usually runs somewhere between 6, and based on your credit profile, you're going to be looking at, let me run, so somewhere between 6 to 12% of annual sales. So when you look at it, depending on the thresholds of where if there's cash advances or where they are, all that is taken in consideration, right? So we have to look at the whole picture of each legal entity. But we can certainly, the one, if does not have any, that one's super easy to get through. I would tell you not to, because if we haven't run credit yet, and I would be very cautious of submitting your file to anybody else that's running credit, because it could hurt your credit, because right now I have that your credit's over 700. Is that correct?
Yes.
Yeah, okay. And then I have home ownership. You own it. Not that we're using your home for anything, but a mortgage helps for sure. And that mortgage is in your name?
Yes.
Okay, and under the LLC, is that you and your wife, or is it just you 100%? How's the breakdown of the ownership?
Oh, I'm sorry. So when it comes to the home, it's my wife and myself, and businesses are the same as well.
Okay, so everything is the two of you. Okay.
Yeah.
And then from, when we look at it, so each of those entities we can look at, I know it seems like that one's going to be easy because there's no balance on, and we do need the updated balances on the contracts on the current competitor loans. And then I would say we're going to have to push that one into November. So we're going to hold off on that one for now.
And what's the reason for, real quick, what's the reason for holding back? Because you doesn't have any loans on it right now, right?
Oh, you told me you just funded one 2 weeks ago.
Oh, okay. Yeah, I forgot about that.
Is that correct? That you just took out a draw 2 weeks, or you took out funds 2 weeks ago through, or did I not get that right?
Yes.
Okay. So I have to wait 30 days if there's any recent funding.
Okay.
Or it's just going to get auto declined. So there's no sense in me submitting something that I'm just going to come back and tell you it's declined, right?
No,
so I'm just I'm trying to save you from that.
No problem.
It's easier for me to just be transparent up front, right?
Okay.
So the other ones have a little larger balances. Sales looks good. The sales volume for and looks very good. But I believe because it has
those MCAs,
two MCAs, which means that the balances have to be at 30% to our approval amounts. So that's kind of the struggle there.
So real quick,
I was gonna. I'm sorry. Can I?
Go ahead.
So it would have to be 30% of the approval amount. So the approval amount is what you said, anywhere from up to 12% of sales.
With 2 or more, it's going to be capped at between, depending on the credit, somewhere between 7 and 8, because I can't go out longer than a 1-year term if somebody has more than 2 cash advances and a 6-month history.
Okay.
So these are the little nuances that you don't really with our bank partners. So we have to kind of get through it with the cash advances. So that's why if there's no cash advances, that one should be fairly easy. The other ones, when we get those balances and the contracts, I may be able to potentially pay them off since there's one, but I have to like look at it, and then I got to run all the numbers to see if it meets the threshold for the bank. So these are the little nuances that.
Real quick. So I want to, because I have to get rid of I have to get rid for 130 here real quick. I'm sorry. So I believe you mentioned we're missing some bank statements that you're going to be submitting, correct?
Yes, and I'm actually working on that right now to get over to you.
Get those to me ASAP. I think that we need to get the bank statements. Get me the payoff statement for, so we can use funds to pay those down, so we can put those in a position where they can get funded, because those revenues are higher, and I think these numbers here, we can get, you know, something much more reasonable once we go with that plan. So get those bank statements with me, and then again, and take it from there. But I really do appreciate your time.
Yes, of course. And listen, guys, as I'm sharing this, I'm just trying to be very transparent, because I'm not big on surprises. So I'm not trying to, you know, so just so you know that, you know, I'm just trying to tell you where everything will land. And you too, Brian.
No, I appreciate it. I like it straightforward.
Okay, good. I like being straightforward, but sometimes directness people can take it the wrong way, right? So I'm just making sure, because I want you to know where this is going to land, because I don't want to waste your time as being a busy business owner.
And I wanted him to, you know, I've been rubbing it in all week, but I'm glad that even from a lender side, because I've been from the broker side rubbing it in like, dude, you need to stop taking this merchant cash advances. But now you see how they even make you look bad in front of the lender.
Yes.
Wow, Brian, you really rubbed it in. I mean, my God,
No, I'm just, you know, I mean, honest, look at this. I'm looking at a business owner that works his butt off, has great credit, makes really great income. What the hell is he doing with MCAs? You know, he could have been talked to you a long time ago, and it's just aggravating because he didn't know that there was another option out there, you know, so.
Right. Well, I mean, listen, in this business, and I've been here a long time, there's, you know, you take what you needed to get what you needed to get done, right? And now that you have everything and you're kind of on this autopilot with the business, now it's about kind of fixing things to help fix your margins, right? So you can actually be making more money in the long run. And cash is king, and debt service is also important as you're looking at cash is king, because a dollar's a dollar, and you like to have more in your pocket. You know? So that's where we try to accomplish, but you know, we might not get there with everything right away, but I think there's a work in progress. We can eventually migrate and turn them into revolvers that will help you, and then eventually graduate to like the bank giving you access to lines of credit. That's the next step from there. Even though the banks are being very hesitant today, but you know, in general, getting to that next level with your depository banks. You know, so it's just moving things, and it's very fluid business, but we'll get you there. I think the most important is let's concentrate on the ones I think we can fix today, and then we can work on the other ones in time. My biggest advice to you is be very cautious of sending out and having people run your credit and leveraging your credit, because that I can't go back. And credit, where credit falls is where it falls, right? It's kind of like that hard line in the sand. So, you know, so just and then let us see what we can do to improve your cash flow. Okay?
No, that works.
Thank you so much.
Of course, I'm going to let you go. I know everybody has meetings. I'm going to send an email so everybody has my direct contact information.
Yes.
And we'll make sure everybody, and we'll start working through the immediately.
Yes, I'll get those. Okay. I'll get those tapes as soon as I get them. Thank you so much again.
Okay.
You hang around. Don't go anywhere. Don't go anywhere. Okay.
Okay.
Bye-bye.
Anyway, if you stay with me through the end, you know, I appreciate you. I really do. Please go ahead and give me a like to the video, subscribe to the channel. And I guess I should go ahead and pay some bills. Let you know what this video is brought to you by our sponsor, Broker Solutions Academy. There's going to be a link in the description. We work with people that are interested in becoming a business loan broker. We have a very comprehensive business loan broker course, and we're going to be teaching you everything you need to know about how to become a business loan broker. Our mission statement is we help business loan brokers understand and simplify the various funding solutions that are available in the marketplace so you can properly serve your clients, stop the endless confusion and self-defeating pointless rat race they're currently in, and grow their business while maximizing profits by teaching them how to become a real business loan broker, not just a referral partner. This video is also brought to you by Pennington Consulting Group, and that's where we work directly with entrepreneurs and also business owners to help them get funded. So if you're looking to start, grow, or even expand your current business, Pennington Consulting Group, there's going to be a link in the description where you can go ahead and schedule a time. And like we always say at Pennington Consulting Group, our goal is to help you reach your goal. Again, thank you for joining me today, and I'll see you in the next video.